Hi, my name is Amanda from Macquarie Warrants, Malaysia, and today we have Daryl Guppy, renowned financial columnist, author, and inventor of the Guppy Multiple Moving Average with us for a chat on the Hong Kong market. Hi Daryl, the HSI and HS Tech indices have lingered below the key 20,000 and 4,000 levels for a good part of the year, following some weakness from March. Do you have an opinion on them and the levels that you would be looking out from here?
Now, the key factor to consider is what we call key levels. The key levels that we see on a chart are often different to what other people, fundamental analysts, believe are the key levels. Let me explain the difference. For many people, the key level on the Hang Seng is 20,000. But when we come to look at a chart, the key level is 22,700 and 24,000. This creates a very small or narrow trading band. In the past, the index has come down and hit that band and then consolidated. When it's fallen below that band, it's used that band as a resistance level. So the area between 22,700 and 24,000 has acted historically as a support and resistance barrier. And we can see that the Hang Seng has reached 22,700 and retreated away from it. Now the support level is at 18,000. It dipped very briefly to 18,000 back here early in 2022, and we moved well below 18,000 in 2022 as well. But now the index has broken this long-term downtrend. It will continue to trade in rally and retreat behavior between support at 18,000 and resistance at 22,700. Before a new uptrend can be established, it must move above 22,700 and also above 24,000. This looks unlikely in the next quarter. So we're anticipating sideways trading patterns to continue. Now, there's always a number of people who want to use the Hang Seng as a proxy for the Shanghai market. So they believe that there is some relationship between the behavior in the Shanghai market and the behavior in the Hang Seng index. The quick look at the Shanghai index chart shows that this type of relationship no longer exists, if in fact it ever did. The Shanghai index chart is very different. First, it's coming off a double bottom formation. We don't see that in the Hang Seng index. There is a narrow trading band which acts as both support and resistance, not as strongly as it does on the Hang Seng. Currently, unlike the Hang Seng, the Shanghai index has a strong uptrend developing, and because of the double bottom pattern, there's a high probability it will move towards 4,000 as a target. Strong resistance, what we would call a triple top, at around 3,800. So the behavior of the Shanghai index is quite different to the behavior of the Hang Seng. Don't confuse the two. Trade what you see on the chart, not what you think may happen in related markets. So when we come to the Hang Seng Tech Index, the behavior is very different from the general index, and that is a warning.
Thanks, Daryl. Let's stop here shortly to show investors how they can gain leveraged exposure to the Hong Kong market with structured warrants over the Hang Seng Index. Bullish investors may consider the current focused call warrants, whereas bearish investors may consider the put warrant. However, do take note that the focus warrants for the HSI may change from time to time depending on the index and inventory levels. You can use our warrant search tool to quickly check a warrant's liquidity. For HSI warrants, the focus warrant will have 4 million units placed on each of the bid and offer. You can also see important indicators such as the inventory sold out indicator. Other than that, investors may also consider structured warrants over the iShares China A50 ETF. Its movements correspond closely to the performance of the FTSE China A50 index, which is designed to represent the performance of the mainland Chinese market through the 50 largest A-share companies listed on the Shanghai and Shenzhen stock exchanges. With that, Daryl, what is your take on the Hang Seng Tech Index?
Again, many people think that the 4,000 level is a key level. But when you look at the chart, you can see strong support at 3725 and strong resistance at 4,800. Yes, the downtrend has been broken. And we start the downtrend line at this midpoint here because that line connects most of the peak highs. It is the best definition of the downtrend. So what's it going to take? It's going to take a strong rally to move above 4,800 before we can say there's an upside breakout. A move below 3725 has a downside target at 2,200. And that target is calculated by taking the width of this trading band and projecting it downwards. Of course, we can apply the same technique to the upside, measure the width of the trading band, and calculate how high that will move if there is a breakout. And that gives us an upside target of 5,875. However, there is no indication of a strong breakout pressure in either direction. So we're looking for a continuation of this sideways trading band. And to that extent, the performance of the tech index is similar to the performance of the underlying Hang Seng.
Thanks again, Daryl. Again, for our investors' reference, we also have call and put warrants over the Hang Seng Tech Index, allowing investors to gain exposure to the largest companies listed on the Hong Kong Exchange, which have high exposure in selected technology teams, including heavyweights Alibaba, Tencent, Meituan, and Xiaomi. Moving on to our next question, Daryl. As certain tech companies have begun preparations for the IPOs of their units, what are your views on how this may affect the Hong Kong market?
We have two major IPOs coming to list, Alibaba and JD.com. So the question is, how is that likely to impact on the performance of other stocks? Now, we can't chart this, but we can look at the impact of large-scale IPOs on other markets. And the first and most important thing is that it sucks liquidity out of the existing market and it is transferred to these new giant listings. However, we can overstate the impact of these IPO listings. Yes, certainly there is a short-term impact, but in the longer term they become just part of the general market trading and longer-term trends will be established. So liquidity is spread more evenly throughout the market, and we won't generally see a major long-term impact from these new IPO listings. Trading an IPO is an art by itself. There's a high probability that these will continue to rise after listing. But we still need to manage our exposure, our risk control, until a strong trending direction is established. The technical analysis of the Hang Seng Index and of the sub-tech index suggests that the market is likely to continue trading in a sideways movement rather than making a strong trend break up or down. And that's irrespective of any impact of IPO listings. So what's your choice in this situation? Your choice is to be aware of liquidity. There will be a temporary move of liquid markets away from existing stocks as the IPOs list, but then liquidity will even itself out across the market. If you decide to trade the IPOs, then be aware of liquidity as the primary issue that will tell you whether you can get into a position and also out of a position. Until the next episode, I wish you every trading success.
Thanks, Daryl. Until next time. Thank you for watching our chat today, and do subscribe to our newsletter and follow us on Facebook and Telegram to be notified of our next video. You can find the links in this video's description. Have a good day.